If you were watching my live session yesterday, you would know that I hit a bit of a technical problem. I lost my Zoom connection. I was about 85–90% of the way through the video in which I was sharing my work in progress checklist for entering trades. And so this video is the concluding part. It should only last about 15 minutes. And I'm going to post them both and send the links out to anybody who's interested. So I'm going to share my screen. I'm going to pick up where I left off. I've just had a look at the previous video. I was at this point where I was explaining my alternative stop losses. So I'll just go through that bit again. It's a bit of an overlap, but it makes common sense. So I was explaining that if I was going to get into this trade, this is a trade that I took the previous day. Before getting into trade, I need to decide where my stop loss is going to be. And I was explaining that one possible stop loss or one suggested stop loss would be this candle here, the bottom of that candle there, which is not only a wave up candle, but it's also a bull engulfing candle. So that's an ideal stop loss, but it's a bit on the large side. So if I pull this down just to measure, that would be 9.8 pips. There's a second alternative stop loss. So that was that one there. This one here is a bull engulfing candle. So I could go to the bottom of that bull engulfing candle. If I just move that up to, that's more or less it. That's 5.4. That's actually, I'm exaggerating there. It's 4.1 pips. So I was explaining that I tend to go for a bigger stop loss. I tend to go for a minimum of 5 pips for the simple reason that your broker spread can be as much as 2 pips. And then therefore that means that you're more likely to get taken out at your stop loss. So what I actually went for on this trade was the third option, which is the bottom of that candle there. And that gave me a stop loss of 8.2. Now, I was going to go on to explain that your choice of stop loss is vital because it also controls your profit. And if you think about it, if I'll just move this out the way because it's not relevant right now. But if I went for the larger stop loss, which was down there, that was the bottom of that candle, that was 9.8. Now, for me to get a 1.2, so a 1 to 2 risk to reward, as an example, I'll put it to that point. We'll leave it at 2.04, but I'm trying to explain that if my stop loss represents 1% of my account, then this take profit up here would represent 2% of my account. So in order to get 2% growth on my account, in this instance, I have to get a price increase of 20 pips. Can you see the 20 up there? So we've got 9.8 pips stop loss and we've got 20 pips take profit. That's to achieve a 1 to 2. And just to confirm that 1% of my account growth is my risk, 2% of my account growth is my reward. So that's on the first potential stop loss. The second potential stop loss would have me at that level there. And in order to get 1 to 2, I'm going to leave it at if I can get it to just over 2, I'll be happy with that. We'll call that 1 to 2. It's near enough. But in order to risk 1% of my account to get a 2% account growth, I only need a price increase of 7.4 pips. However, that's not a good trade because the stop loss is only 3.8. And as I said before, your broker spread can be two pips, so that would be quite easy to be taken out. In this case, you can see the price didn't actually go down below the entry price, but that's not always the case. Price can go down before it goes up. So I took this one. This was my stop loss, the bottom of the third engulfing candle. That was 7.3 stop loss. So I'm risking 1% with a 7.3 stop loss. If I want to make 2% gain, hope I get a bit more luck getting this in position. There we go. 2. Okay, so in this case, I'm risking 1%, i.e. 7.3 pips, and I need the price to increase by 14.6 pips to give me 2% profit gain, 2% account gain. So that was my attempt to explain the term. I think it comes from Brian Knight, who says your stop loss is actually your profit regulator, because the size of your stop loss determines the amount of profit you get per pip. So that's covered. I'm going to go back to my checklist, just make sure where we are. We're actually talking about stop loss, and there are alternative stop losses that you can take. You can take the wave up or the wave down candle, or you can take a nearby engulfing candle. You need to decide in advance which engulfing candle you're going to take, or which of those candles you're going to take, in order to have a sensible, safe stop loss. So I'm going to move on now to take profit. The policy I have is that, or I've had adopted recently, is I always go for a minimum of 1 to 2. Sometimes I go to 1 to 3, but if I was going to take my first trade of the day, I would go for 1 to 2. I would bank the 2% account growth and then decide whether I want to take any other trades for the day. But where would I put my stop loss? Now, I put on there that there are a number of options. You can choose any trend line. If we're doing the Crossfire trend line, you can you put 2 trend lines on the chart before you start trading. You can go to a break of structure point. You can go to previous highs or lows. You can go to outstanding POCs. You can look at an area of imbalance, or you can go there's an indicator called pivots, which I'll show you in a minute. And also there's the change of PSAR is a potential take profit, and an engulfing candle in the opposite direction to your trade is also a potential stop loss. Now, some of those depend on you being present during the trade, in other words, actually watching the trade. Others you can set and walk away. So I'm going to go through those. I'm going to try and cover them all. And I'm going to give examples of each of those. Now, whilst we're looking at this particular trade, which I took the day before yesterday, that was my stop loss. I actually took my profit at 3, risk to reward of 1 to 3. So that was, it's landed on 2.99, which is as near as I need it to be. I took my profit at the top of that green area, and I marked it up as a 1 to 3. So my account growth on that day, on that trade, was 3%, because I'm risking 1% to make 3%. Now, I got out at 1 to 3. That was my first trade of the day, I believe. And I took that, I put the money in the bank, and I walked away. I don't think I took another trade on that day, but that my thinking was, I'm happy with 1 to 3. There is an obvious alternative, I'm looking at the 5-minute chart. Had I stayed in until this red peace hour appeared, I could have made more than 1 to 3. Actually, I'm talking rubbish there, because the price actually went below the 1 to 3 at that point there, where the peace hour appeared. It went to below the 1 to 3. So I would have slightly missed out if I'd stayed in. Let me see. I was trying to make a point. If I go on the 15-minute chart and look for the same trade, it's back here somewhere. There we go. No, that's the one. Okay. Now, if I'd switched to the 15-minute chart, in other words, if I'd gone up from the 5-minute chart to the 15-minute chart to decide when to get out, I'd noticed that price continued to rise up until that point there, when there was a red peace hour appeared. So I could potentially, if I move that up to there, I could potentially have got a 1 to 6.7. And my reasoning for that is, look at these wave blocks, these green wave blocks. I'm actually using the 13 wave blocks. You could use the 62 wave blocks, which would be along the bottom here, but either way, they would still be green. And they started green on the wave up, which we talked about as being a potential stop loss. They remain green. They actually changed temporarily, just for one block there at that point there. Actually, I think this was the wave up that I was in. Yes, this was the wave up that I was looking at. So the wave up stayed from that point onwards, remained to be green. And at this point, it started to flatten off. But coincidentally, there was a change of peace hour. The peace hour went from the bottom to the top. And that is a good time to get out, when the peace hours change from top to bottom or bottom to top. And basically, we would call that trusting the wave. And the wave was remaining green all the way up there, and would have led to me getting a 1 to 6.7 instead of a 1 to 3. So following the wave, trusting the peace hours is a way of setting or determining you take profit. You can get a bigger reward if you simply trust the wave, and if you trust the peace hours. So that's two potential take profits. Let me see if there are any others on this particular chart. I'll just bring that down a bit. I'll go back to the 5-minute, because this was it was a 5-minute that I took the trade on. Let me just see if I can find some other potential take profit levels. If I was, I don't think I actually took this trade. I think I marked it up, but I didn't take it. Let's see what I'm looking at here. I'm looking, we're in a down, wave down, the peace hours like that. There's no potential take profits other than in this situation, we were in a wave down, price was going down steadily, but at this point, we got an engulfing, a bearish engulfing candle. So I might have been tempted to get out at that point, because I was in a down movement, and it showed at that point there. I'll just get rid of that measurement tool. So at that point there, we got an opposite engulfing candle. So I might have been tempted to get out there. If I was sitting watching the trade, I would consider getting out. If I stayed in a bit longer, I would probably quite definitely get out at the wave up indicator on that candle there. So the wave up is, the opposite. So if you're in a wave down and then you get into a wave up, that's a good time to take your profit and move on. Let's have a look at what some of the other potential take profits were. All right, trend line, breaker structure, previous high lows, outstanding PCs. Okay, we'll look at those. Let me see what I can find. Now, I've got, where are we? Let me see if I've got, yeah, I've got SVP on, which is session volume profile. That allows me, I'll go to the 15-minute chart again, and this red dashed line is a outstanding point of control. So this red dashed line here started at the beginning of Wednesday's trading, and it was outstanding at the beginning of Thursday's trading. So that was a potential target. Price will generally return to the previous outstanding point of control. So if I was in this trade here on Friday evening, Friday late, and I was in a sell, price has come below the moving average. I might be in a sell at that point. I might take my profit once I got an opposing engulfing candle. But if I had if I'd actually placed a trade and walked away and I'd set my take profit, I would consider this line here as being a potential take profit. Now, that's the end of Friday's trading, so we've got no idea which way price is going to go on Monday morning when market opens, but it could well just pop down there and take out that point of control. I'm not in favor of leaving trades running over the weekend, by the way, but I'm just using this as an example. Price will at some point come back and revisit this line here. And just a tip, it's actually marked as a line, but I regard it more as a range. So if I was using this level as my take profit, I would probably set the take profit slightly above it, because it might come down and not quite make that line. It might just go and visit it slightly above. So that was a previous point of control. We've got Friday's point of control again. So again, if we're looking at trades on this pair on Monday morning, we've got two potential targets. Price will go to that point at some point, without any doubt. It will go back to that point. The problem is we don't know when. It will come down to this level at some point, and again, the problem is we don't know when. If I try and zoom in and see if there are any, zoom out and see if there are any other points of control. We'll just go back. No, there's none becoming evident. They've all been taken out. These are, you see, there's one there, but it was taken out. There's one there, but it was taken out. That one was taken out. That one was taken out. The message is that the points of control will be taken out at some point. So if you're looking at the situation that we'll be looking at on Monday, we've got another one up there now. That's at a higher level. So that's probably an very old outstanding point of control. Comes back to here, possibly there. I think it's that one there. So that's from Friday the 12th of May. So that's got to be taken out at some point. So if you're looking at Euro USD on Monday morning, I'm talking to you on Saturday the 3rd of June. If you're looking on Monday the 5th, there's 1, 2, 3 potential targets and they could be used as take profits. What else did I talk about? Let me just reset that chart. I look sometimes at actually, I need to go to my straightforward Forex and see and look at the settings and see if I've actually got this on. Look at inputs, go down to the bottom. Right, so I've got under inputs, I've ticked the show close needed to break market structure. So I can, the thing is they disappear after a while. So unless there's a recent one, it won't show. No, they disappear once they've been broken on the chart. But basically, on any chart, let me just go to a different chart, see if I can see anything there. No, this is difficult to show on a video because they're only there sort of in real time. So let's say that this where this red candle became a green candle, price turned around. That was the lowest low, and if we were getting in for a sell, we would need to break past that. So there would be on this indicator there would be a dashed line coming from that candle there, and it would stay there until that price broke through it. And equally, if there was if that was the, well, we'll try and find the high point. That was the high point of the day. So if we're getting in for a buy, there would be a dashed line across there, and I wouldn't possibly use that as a take profit. If I was getting in for a buy round about here, and we were heading upwards, there's a potential take profit, but this level here, up here, would be a potential profit because there's obviously some resistance there, and we need it to break structure. So that's what we're looking for when I talk about break of structure. Sorry, I couldn't show it. We need to be looking at real life charts. Let's have a, so we talk, or trend, any trend line or any moving average even is a potential target. So highs and lows we mentioned briefly. I'll see if I can find examples. I've talked about engulfing candles. I've talked about PSAR changes. I'll talk about pivots and imbalance and trend lines. Go back to my favorite pair, Euro US. So okay, so if I was considering getting in for a sell, we've got a wave down here. I'm just going to try and zoom in a little bit. So I'm looking at this wave down here. That is always the first trigger. In fact, I set alerts to let me know when there's a change of direction. So if we're in a wave up, so we were in a wave up, and then we got a wave down. Now I would have got an alert to draw my attention to the fact there's a wave down. I would come back to the screen, and I would see that there's a wave down, but I would see that there isn't an engulfing candle. There is one there. I prefer, I'm not ruling that out, but I would prefer an engulfing candle after the wave down, in which case I'll be waiting for that engulfing candle. But when I mentioned trend lines, we've drawn on the chart the red trend line and the green trend line. And in that scenario there, and in that scenario there, we're in between the red and the green trend line. So I wouldn't get in until price had gone below my trend line. Let me see if there's a better example. That candle there, I wouldn't get in on that candle there because it's above the green trend line, and it's likely that price will bounce off that green trend line. I would wait until price got below the trend line, And then I would say, right, where's my take profit target going to be? And my take profit would be this moving average. In fact, I would go just above it to be on the safe side. And it would actually, it wouldn't have reached my take profit on that candle, maybe not on that candle, but certainly on that candle. So I'm using the moving average in that instance as my take profit. Let me see if I can find something. I always look left. So let's bear this in mind. We're thinking about getting in for trades round about here. Let's see what happened in the past. And so what I'd be thinking is, you see this this level here. There's lots of activity going on round about this level, quite close to the 200 moving average, but the 200 has moved up and price has moved up. If price is now starting to come back down, it might go to that point of control. That might be a potential take profit, or it might go down to this level here, which was the lowest level. See where the price reversed at that point? That could potentially be a target. So if it broke through there, it's potentially going to go to that point there. And once it reaches that level, it might well bounce the same as it did there. Let me see if I can find some imbalance. I'll go to a bigger time scale. You can do this on the 15-minute, but for demonstration purposes, that's where price is now. So we're looking for targets below that price. Now, can you see there's some imbalance? That entire candle up to the bottom of that wick. So that area there is an area of imbalance, and price may well go down and fill in that imbalance. So if price continues to go down, I've got three potential take profits. I've got the outstanding point of control from the previous day. I've got that low area there where price reversed, so there's some resistance at that point. And I've got this candle here, which is an imbalance. A lot of that candle is imbalanced and it needs to be taken out. So just by looking left, I can see potential take profits. There's nothing else on that screen that would comprise a take profit. I'm just going to check to see if I've covered everything. So I've covered trend lines. Any trend lines on the chart are potential take profits. And a break of structure I've covered. Previous highs and lows I've covered. Outstanding points of control I've covered. Imbalance, yes. PSAR change, and then go from there. So pivots is probably the one I use the least, but it's an indicator that you can get on TradingView. I'm hoping I've actually got a chart with this on. So if your chart is full, in other words, if when you try and put another indicator on, it says no, you need to upgrade your plan with TradingView to put more indicators on. I found that if I use this, if I click on that arrow there, it gives me some alternatives. So I've got this. This is my SFF chart for Euro US dollar, but I've got one called pivots, which I've created. I need to leave that page. I should have saved it before I left it, but never mind. Let's see. There we go. It's now. It's on EuroCAD, but that doesn't really matter if it actually populates. It's taking its time. Right. Okay. So let's have a. So this is what you see if you load the indicator, the pivots indicator. If you put it on this the daily setting. So I've got it on inputs. I've got Camarilla and I've got daily time frame, and I think that everything else is straight out of the box. But this gives me potential take profits. It's basically showing me where price. I should have stayed where I was. So this is Friday the 2nd of June. If I just zoom in on that one, right? So it's giving me, you've got S5, which is support number 5, support number 4, support number 3, 2, and 1. So these are all support levels. And as you can see, when it went down, it hesitated at that one. It broke through that and has come back up to it. If you look at this, the support level, resistance level up there, there's this resistance level there, there's a resistance level there. So these are support and resistance levels, basically, where price has turned previously. So if I was trading on Monday, I'd probably look back at these and see, and also see the current days. But I'd also bear these in mind. If price decides to go up, these points are potential reversals. If price is going up, if price is going down, there's not a lot at the moment because price is as low as it's been for some time. But I use pivots sometimes if I'm looking for a potential take profit. And as with all the other potential lines of take profit, I treat them as ranges, and I normally set my take profit either just above or just below. So if I was going for a buy, it would be just below the line. If I was going for a sell, it would be just above the line, just to be on the safe side. So I think I've covered all the potential take profits. As I say, this list is still a work in progress. I need to refine it a little bit. But the only other thing I wanted to discuss was wicks and indecision candles. If you've been on my live sessions, you'll know I get, I'm going to go back to, if I save the pivots and then click on that arrow, I can go back to SFF, and it gives me a different view of the same chart. So, okay, so let's reset that chart. Okay, so that's not the best example. Just bear with me until I find a good example. When I'm looking for, out there, I've got one there. So this is Tuesday of last week. So I'm looking at this area here, and these red candles. If you look at if you were looking at getting in for a potential trade here, you might be tempted to get in for a sell because we're in a wave down. The 13 and the 62 below the 200. The PSARs are red. The wave's red and continuing to go down. So you might be tempted. There's a red, a bearish engulfing candle. You might be tempted to get in. What sometimes puts me off is the wicks at the bottom of the candles. Or if we were looking at buy, I'd be considering the wicks at the top. But in this case, we're looking at a potential sell. There's a wick appeared there. It's very wicky over here as well. So it says to me there's some resistance to price getting below that point, and then price gets below it. But look at the large wick above and the large wick below. It's a worry that price might be getting as low as it's going to go, and sellers are trying to push it down, but buyers are saying no, we're not having that. We're not having price go any lower than that. We want it to go back up, and sure enough, the next candle was a green candle. It pushed price up. It tried to get back down again, but then it eventually got its own way. There's an indecision candle, which I would avoid. And in the end, the buyers got their own way and they took it back. Look where they took it to, the 200 moving average. initially. It had potential to bounce off that. So if I was getting in for a buy, I would use that as a potential take profit, or at least I would measure it, because it may be that buy there wasn't sufficient room to profit in that move. For instance, you wouldn't get in until at least that candle, possibly even that candle. You would hesitate then. So you might get in on that candle, but you've only got a few pips before it has the potential to bounce again. So I'm just going to measure that to. I know you probably wouldn't get in on the engulfing candle because it wouldn't be an engulfing candle until it had formed properly. But that's 14 pips. So fair enough. Maybe you had a small enough stop loss, you might get in. That wasn't the best example, but it was a good example of the wicks at the bottom of candles or the wicks at the top of candles, where you've got 2 or 3 wicks. It indicates to me that there's a battle going on between buyers and sellers, and you might get in for a sell and then get taken out. I think I've covered everything at the minute. I've still got some more work to do on this list. I'm going to try and get it finished off in the next couple of days, in which case I'll post it and you can all take a copy of it. Thanks for jumping on for this video. I apologize for the Zoom connection failure yesterday, but if you're watching this video on YouTube, which you probably will need to, if you like the video, just give me a like on YouTube, and if you want to subscribe also to my channel, and then you'll get notification of any other videos that I produce. So look on YouTube, look for my name, Richard Costello. There may be more than one Richard Costello, but you'll soon spot mine. My videos are all about trading. So anyway, thanks for jumping on, and I'll see you next time.